The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Nice to have you with us. Let's have a look at where the market is set to close for Tuesday on a shortened trading week. We're up by about 0.5% there on the CBO 200 and a similar gain on the ASX 200 today. Just having a look at where it's tracking, 0.4%, 28,777. So certainly a little bit more repositioning coming through today and yesterday after we saw those wobbles, I guess, on Friday. And that was similar to what we'd seen on the US session as well yesterday, that repositioning rally, I guess, in terms of the $2 trillion wipeout that we'd seen towards the end of last year. We never really talk about when $2 trillion is added to the markets, do we? But we do like to say when it's been taken off. So yeah, repositioning rally when we look at the three themes of the day. And also, I think what's really interesting is this consumer sentiment survey. We're still very gloomy out there. Of course, interest rates remaining high. The talk of rate cuts keeps getting pushed out. Wages growth when it comes to those real wages look quite stagnant. And according to the ANZ Roy Morgan Consumer Confidence, the majority of Australians actually feel their families are worse off than they were this time last year, and just under a fifth of Australians, 18% in fact, surveyed say their families are better off financially than they were this time last year. A big night of earnings ahead as well, lots to get through. We've got Tesla coming through tonight, Spotify, I think, General Electric, General Motors. I was talking to Mark Gardner as well earlier, of course, from MPC Markets, and he was saying something like 25% of the S&P 500 report this week. So maybe not a great week for us to have that public holiday because we've got a lot to catch up on. But let's have a quick look at the sectors of the day in terms of what we saw in our market. Some of the tech players looking quite good. NextDC, they're up 2.5%. Let's flip the board and have a look at some of the REITs as well. Goodman Group, they're up by about 1%. When it comes to some of the energy players, let's get to the Santos board. That's probably the most important one. There we go. Woodside is down 0.5%, Paladin down 1.7%. And of course, worth noting that we saw a big sell out of gold today as well. In fact, speaking of gold, Northern Star there, down 3.4%. It did release its quarterly update today, saying it remains on track to deliver its full year 24 guidance of 1,600 to 1,750,000 ounces of gold sold. Seven Group Holdings, one step closer to its takeover of Boral, increasing its voting power in the cement maker to 82.4%. Westpac's first half reported NPAT cut due to changes made to notable items. And interestingly, the banks are looking good today and yesterday, despite that Citi downgrade. And Brambles was our stock of the day. It reconfirmed its full year guidance, but the market obviously expecting more, down 5.7% today. Let's get now, though, to Martin Kraut. Welcome to the COB. Is this kind of what you're seeing? Because Friday was such a, I guess, sharp sell-off, and then we've sort of come back and gone, okay, well, we're not in World War III, and we're going to get back into some of these positions. Yeah. So it's a risk. It's an off, risk off, if that makes sense. So it doesn't really feel like risk on. It's like it's not. So people are really bullish about equities again. Obviously, the strike by Israel and Iran, or Iran and Israel, happened during our market, and so we sort of panicked a bit on Friday, going, this could get worse. And then obviously the weekend, everything's settled down is probably the wrong term, but so we're just moving back to, I suppose, that stance we had, and now the focus is back on earnings. So we've moved from geopolitics on Friday back to earnings this week. So a couple of quarterlies out, as you mentioned, that were a little bit disappointing. Brambles today, even though they reaffirmed, in fact, Northern Star and Brambles both reaffirmed their full year guidance, and you think, well, surely that's okay, isn't it? They're on track. But most companies have ranges, like they go, we'll guide EBITDA to 600 to 650, and all of a sudden you think, well, they're going to hit the bottom of that range, so they're still technically hitting guidance. But and that was the story with Brambles. It's like they're going to have to run faster now to catch their full year guidance, and people just didn't think that they could. So volume starting to come off in North America, inflation starting to come out of the system. It's going to be harder for companies to achieve their earnings expectations going forward. That seems to be a message coming through. And when you speak of earnings expectations, particularly when you look at the US, are they potentially too high?
Yeah, they're way too high. So I mean, they always are, right? So analysts tend to downgrade throughout the year, and then in the US they tend to upgrade post the results. So we get this sort of companies talking down their numbers and then beating, and it's all about that. So if we just look at the path of earnings per share growth, 2022 was like a 2% growth rate. 23 was like 5%, in line with GDP growth, and we're looking for 11% this year, 14% next year, and 11% the year after that. So if the economy is only growing in nominal terms by 4 or 5%, how the heck do you get 10, 11, 12% earnings per share growth? You either need massive productivity gains or continued expansion in margins, and neither of those two things look likely at the moment. In fact, a lot of companies are struggling to hang on to their margins because there's still cost inflation in the system, and it's getting harder to pass prices on, as Brambles showed today. So I think expectations are too high. So people have been, yes, they've been upgrading their economic growth numbers, but they're from 2.1 to 2.3. They're not from 2 to 10. So I think this earnings season in the States does look like being brilliant. And as you said, we've got a lot of companies reporting this week. We've got Microsoft, Apple, Tesla all this week. So I think we'll start to see the whites of the eyes of the market. I wouldn't be surprised if analysts start bringing down those earnings estimates going forward.
You'd kind of think what's priced in, a company like Tesla is really, really going to have to shoot the lights out.
Yeah, which all the bottom-up stuff suggests that they're really struggling. They're cutting prices. They're in a price war with a lot of the Chinese EV manufacturers. We're hearing stories of reduced sales volumes in China, so it doesn't look good for that company. But more broadly across the economy, I think the surveys that we're seeing are good news from an interest rate perspective, as in inflation's coming down, but they're not positive for earnings, because if you're not getting price rises and volumes are really not that strong, where's your earnings growth going to come from? You can't really take costs out in this environment because you can't get workers, So I think I think margins are under pressure.
Let's talk about the overall economic picture as well. We've got the core PCE in the US on Friday. We've got our own inflation picture through tomorrow. When it comes to our economy, traders kind of pricing out that we will see any kind of rate cut from that.
Yeah, I don't know if you've got the cash futures chart there, but it's almost flat now. So look, our view's been, Juliet, that we'll have rates on hold until November, and then we'll see a rate cut of 25 bips. And even that's starting to look a bit optimistic, because we've got DEC futures at 4.1. So we're saying they cut by 25 points in November. So, that's already starting to look like a bullish call, which is hard to believe that, if we look at Christmas time, we're looking at 3.7% cash rates by Christmas, and then, maybe low threes by the end of next year. So that's starting to look heroic. So that, everyone's come to the point of view that the economy is resilient. The labour market's still tight. There's still this services inflation kicking around. The Reserve Bank cannot cut rates while they've got that pressure. They also know we've got, 15-20 bill of tax cuts coming on the 1st of July. It does look like, even though Jim Chalmers is trying to talk down the outlook, it does look like the government's going to print a pretty big surplus, which they can spend, set up an election second half of the year. So the Reserve Bank's got its hands tied while this economy is this strong. So again, the outlook for earnings is not fantastic. The economy's not off to the races, but it's not slowing enough to get inflation out of the system. Therefore, we've got these higher for longer rates.
And how does that, I guess, all flow through into how people are positioning too? Because we talked about this sort of, I guess, the repositioning rally, the fact that this is a public holiday shortened trading week as well. What are volumes kind of looking like? Yeah,
it looks pretty soft at the moment. I mean, we're a bit biased because we're in New South Wales at school holidays here at the moment. Anzac Day falls on a Thursday, which means everyone takes Friday off. So it kind of feels like a bit of a shortened week anyway. So, a lot of people are away. You just, walk to work, look at traffic, look at the number of people in the dealing room.
My producers trying to book people to come on our shows.
Look at the people out there in the studio. Yeah, so look, it feels like a bit soft week, but that's a little bit misleading because information-wise, there's a lot of data coming, and those of us who are still at work have got our work cut out, Juliet. Can't we all go to the beach, can we?
We can't. Some of us have to keep the economy going. And I guess speaking of kicking the economy going, what is your sort of, forecast of what we might see from that inflation picture?
Yeah, I mean, it feels like it's coming down. I looked at the SEEK advertised job data, which came out last night, and that suggested that wages growth is just ticking down. I also looked at the UBS Evidence Lab supermarket survey, which also came out overnight, which suggested that food prices in particular were starting to come down. So not like plummeting, like I think Singapore's CPI came out well below expectations today. We're not seeing that sort of big drop in inflation like we are in China and in Europe, but it's coming down. So obviously those month-to-months, Juliet, are really volatile, and it doesn't include services, so it can be quite choppy. But I'd expect that we continue to see softening in Aussie inflation this week, and then PCE is obviously going to print 2.7, slightly down on 2.8. So we're seeing this cooling of inflation, but it's not happening fast enough. We all just want to get to 2 in the States and 2.5 here, so we can see rates being normalised, whatever that is, coming down. That's what we're all waiting for. It just looked like that picture's being pushed further and further out.
At least no more $18 cabbages, perhaps, though, Martin.
I hope not.
Some of those prices are coming down. All right, thank you, as always, Martin Crabb there from Shaw and Partners. We touched on Brambles there, and of course how it's been kind of hit quite hard today, and it was the stock of the day. Ben Richards from Seneca Financial Services and Rudy Philippak van Dijk from FN Arena shared their take on the call with Andrew.
At least own Brambles, but I think you can buy it today as well. If that particular part of the portfolio needs a little bit of extra additions, allocation.
So
but I wouldn't think any spectacular things from Brambles. That's not.
Earnings have kind of gone nowhere since it listed 20 years ago. It's paid some dividends along the way, of course. But you know, EBIT has only increased at 2.6% CAGR over 10 years. So we think there's probably better opportunities. If you're a yield investor, it only yields 3.5%, partially franked. So, look, I don't see too many reasons to own Brambles at the moment.
Would you hold it though?
I would say it's a sell, just based on other opportunities.
All right, let's have a look at the market leaders in an up day today. And Luca Resources had a good day, up by almost 6%, as did Tabcorp, Polynovo, Iris and Ramsay Health. To the downside today, we saw Lifestyle Communities off 13%, Emerald Resources down almost 7%, and Brambles, of course, we've touched on quite a bit, down by 6%. Capricorn Metals and Bellevue Gold also coming under pressure. When we look at the small to micro cap leaders and laggards, MedAdvisor there up by an impressive 17%. Invictus Energy there also up 8%. And to the downside today in the small caps, Farmost, Live Verdure, Challenger Gold, Select Harvest, and Visun off by 7.4%. All right, as we mentioned, a really busy night ahead in terms of US earnings. We've also got US flash PMI coming through, and French, German and UK PMIs, the Richmond Fed Manufacturing Index as well. But let's get to what we'll be telling you about tomorrow morning. General Electric, General Motors, Halliburton, Lockheed Martin, Mattel, Pepsi, Spotify, Tesla, UPS, Texas Instruments, that's always a really important one on the barometer of the overall economy, and Visa all releasing earnings results. So very busy night ahead for all those analysts on Wall Street. All right, let's have a look at what we're going to see here tomorrow. It is, of course, the inflation picture for the first quarter across the ditch trade balance from New Zealand. Some quarterly reports as well coming through here in Australia. Amongst them is, of course, Fortescue Metals, Karoon, Lynas. We've got Beach Energy there as well, and Woodside holding its AGM. All right, let's have a quick look at where the market is tracking this Tuesday. A positive session, up 0.5%. Similar gain, I think, on the ASX 200, which is tracking firmer by 0.4%, 27,676. That's a nice number. And as, of course, we mentioned, the gold players have come under pressure today, as have Brambles. But elsewhere, the market has held up really quite nicely. Be interesting to see where we end up overnight in terms of the futures market, because of course it is a big night on US earnings. All we really need is for a lot of those to miss expectations, which, as Martin indicated, are quite lofty as it is. And you would expect that you could start to see a little bit of selling following this relief rally that we saw during Monday's session on Wall Street. But of course, we will bring you all that action and all those big numbers, including Tesla, GE, GM. And we're back live from 9:40 Eastern tomorrow. See you then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil,
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.